Hey there, good morning, folks, and happy Saturday to you. Hope you're having a fantastic weekend, nice long weekend, and plenty of time to go over all kinds of stuff. So, listen, very interesting week last week, and I almost hate to do what I'm about to do because every time I do this type of thing, I usually pay the price for it, but. Uh, I just got done doing a pretty deep dive into the indexes, and I have come across some pretty interesting things. And I know that you're probably thinking, if you've been following me for a little bit, that I might be fairly negative after everything that happened last week, right? And even what did happen towards the end of the week, and let's just go there real quick and talk about it. Uh, on Thursday, it was, so we had a couple of days of the Fed, and I mean, the Fed just getting pounded and grilled by Congress, and that really wasn't doing a whole lot for the markets. If anything, it was kind of confusing, to say the least, talking about negative interest rates and the impact that might be. We have a stress test that's been announced for the banks to play out a scenario of what would the impact of a negative interest rate be. And uh, so Thursday, after a couple of days of uh, the Fed really not doing anything to comfort the markets, we were looking at falling off of a cliff. I mean, literally, we were on the edge of a cliff and we were getting ready to break down through a very significant level at this 1812. And we started to fall off that cliff. It started to happen. Okay, if matter of fact, let's just take a look at this on the 5 minute. And oops, get out of it. Okay, so we were just right here. Right here is where we started to. So we took out this low, and we took out 1812, and I mean, we started to accelerate, and then all of a sudden, look at this MACD histogram. This really shows it well here. All of a sudden, boom, we shot up like a rocket in a matter of minutes, right? And that all stemmed from a tweet, at least as far as we know, from a tweet from a reporter, not a huge, big time reporter, but a reporter nonetheless, that indicated that the United Arab Emirates was ready to cut production on oil. The timing of that announcement was impeccable. You could not have played it any better, right? So, because if anybody started to pile on their shorts as we were taking out this key 1812 area, they got their faces ripped off, right? Right off the bat. So, what was even more interesting was then we had a follow through the next day. And this is on a Friday before a long weekend. China's been closed for a week. We had all this turmoil in the markets, oil making new lows, and the market actually rallies into the close. You've got China that's going to reopen next week, and then we've got us that will be off on Monday, and we'll be able to absorb kind of what's happening in China, right? However they react. Now, I just did see a headline that China's Lunar New Year was up 11% year over year. Um, so there seems to be some positive headlines coming out of China. We'll see if that can carry over into the overall market. But what I'm about to do is usually the kiss of death for me and the markets, actually. But I'm actually pretty bullish for the short term again. Um, and we're going to take you through why. I'm going to take you through why. So there are a couple of things that I really want to highlight right off the bat. And the first one is gold. And what I want to show you in gold is I want to show you this here, right here. We had this big gap up in gold, completely out of the upper Bollinger Band. And this is not the chart that I typically show you guys in these videos. I usually use a much cleaner chart, this one over here. But I've decided to show you this. I know it's a little confusing. I've got so much stuff on here. I've got the Bollinger Bands. I've got every single moving average that I pay close attention to, the 20, the 50, the 200 EMA, Bollinger Bands, the 5 EMA. I've got the 200 simple, 50, 100, moving average VWAP. I've got all this stuff on this chart. So it looks pretty confusing, but the reason why I want to highlight it is, so we had this completely out of the upper Bollinger Band candle in gold. Okay, we had a huge spike in gold. We are overbought in gold. Let's go to the weekly real quick. Look at this. So we came up right into the 200-day EMA and found a little resistance there. We had a big volume bar, and we are overbought on gold for the weekly. Okay? And what this is kind of signaling to me, and one of the things that I was really focused on the last couple of days of last week was dust. Now, you know, the miners are doing really well, and they're not completely out of the upper Bollinger Band yet. Actually, they even look like they might have a little bit more in them. They haven't quite had that parabolic spike yet, but I'm anticipating that it may happen, and that could happen as soon as Tuesday. I mean, if we gap up on Tuesday, or gap down, I'm sorry, because of some news in China, if there's like some kind of a gap down, or you know, and we get this spike in gold miners, where we get a candle completely out of the upper Bollinger Band, that could be the parabolic capitulation, right? Everybody and their brother is jumping into gold, and it could be that people are jumping in right at the top, at least in the short term. So GDX, GDXJ, they're still within the Bollinger Band, but gold itself is completely out of the Bollinger Band, and it does look as though we could get a pullback. This has been a tremendous move in gold. So in the short term, I'm thinking that potentially that move is over. And that's why I'm paying close attention to dust. And I'll just bring that up real quick. So if we look at dust, you know, it's just basically the reverse of what's going on in gold. Let's take a look at it on the weekly. And look at what we've got here on this weekly. We've got a candle that is nearly completely out of the lower Bollinger Band. Okay? With some huge, huge volume this week. Let me go back to gold real quick. Tremendous volume in gold this week. Some tremendous volume in this dust this week. And out of the lower Bollinger Band on the weekly. So what I'm suggesting is maybe we don't get it Tuesday. Maybe it happens Wednesday or Thursday, that we get a snapback in dust and we get a pullback in gold. So that's the first thing that I wanted to focus on for next week. Let's take a look at a couple of other things that really caught my attention this week and why I'm a little bit, well, I'm pretty bullish in the short term. I think maybe we get a continuation of the move that we got on Friday. It may not happen Tuesday. Okay, I'm looking at the entire week. So I'm not saying that on Tuesday we're going to come in and we're going to gap up and keep going higher. We may get some kind of a flush on Tuesday. We may get some kind of a head fake move. But for next week, I'm thinking maybe we could get some positive action. So let's go take a look at another thing that caught my eye, and it was Hack. Now, here's why Hack's interesting. We are completely out of the lower Bollinger Band on the weekly. Okay? We are extremely oversold. Now, I saw a company come out and downgrade Palo Alto Networks, and they are the big player, right? They're the big player in cybersecurity, and they caught a downgrade. And what's interesting about it is they caught the downgrade. Let's take a look at the daily. And I'm not sure if they downgraded it on Friday. Maybe it was Friday. But look at where this thing closed. It closed near the high of the day. Stochastics have just crossed to the upside. It got completely out of the lower Bollinger Band right here, right? But let's take a look at it on the weekly. Looks a lot. It looks very similar to the daily, right? Completely out of the lower Bollinger Band. What is that? A hanging man candle, which it could be it could be a sign of a reversal about to happen. Here's the really interesting thing. Palo Alto Networks reports Thursday. So if they beat and crush and guide higher, what do you think is going to happen to Palo Alto Networks? I think there could potentially be a reversal there. And I think it's worth noting, right? I think it's worth paying attention to this sector. Now listen, if Palo Alto Networks misses and guides down, well then Hack is going to probably go lower, right? And CIBR is probably going to go lower. But definitely worth paying attention to when we get these extremes, when we get these out of the lower Bollinger Band type moves. I think it's worth watching for a potential snapback. Let's take a look at something else that caught my eye. HYG, the high yield. So we have the same type of deal right here with that we just saw on Palo Alto Networks, right? We've got this this candle here, which is hanging man candle, whatever. Maybe we get a reversal here, maybe we don't. It's pierced the lower Bollinger Band. Let's go to the daily on this. And look at this HYG. Every time we've had a candle that is completely out of the lower Bollinger Band, what happens? We get a little snapback, right? Here's another one, little snapback. Well, here's another candle. So we've gotten a snapback. Now, how long this lasts, I don't know. Maybe it lasts a day. Maybe it lasts 2 days, 3 days. I don't know. But stochastics look like they're getting ready to cross to the upside. MACD histogram is trending in this direction. So maybe we get a little bounce in the high yield, right? Let's take a look at the IBB, which I have been focused on I've been saying, look, if we're going to get any kind of traction in the overall markets, we need the IBB to participate. That would be one of the things that could give us a nice rally in the markets is if the IBB would participate. So, Gilead and Celgene actually had a little bit of positive action last week, right? Those are the big boys in the IBB space. So look at stochastics on the daily. We've crossed to the upside, right? We're kind of just hanging out here. So let me go back to the weekly. Look what we got. We've got a candle completely out of the lower Bollinger Band, right? And look what happens every time the IBB has pierced the lower Bollinger Band. We get a little bounce. You don't have many candles completely out of the lower Bollinger Band in the IBB. You get some pierce, right? You get a pierce, but you don't have a lot of candles where you're completely out of the lower Bollinger Band, and we have that here on the weekly. So let's back it out even a little bit more and show you what's a little kind of interesting as well. So where did we come down to in the IBB? Well, we came right down to the 200-day simple moving average. We also came right down to this trend line, right? And we held. We bounced. We have a candle completely out of the lower Bollinger Band. Is it possible that we get some follow through in the IBB next week? Maybe not on Tuesday. But I have to think that this is fairly encouraging action, right? Let me take a look at, let's take a look at Labu. So if we get a bounce in the IBB, or a continuation in the IBB, Labu could benefit, right? 3 times bull ETF. And here's what I'm looking at with Labu. So there's the daily. Let's take a look at the weekly. I mean, just basically made new all-time lows, okay? And what I'm looking for, or what I'm thinking is potentially possible, we've got this long-term trend line here, okay? Kind of basing out a little bit here. If by chance we've just got the stochastics, which just crossed to the upside, if by chance we can just go back up and test this trend line right here, right? And I'm not expecting it to happen in a straight line, but let's say it does it over a few days, right? Where can we potentially go to where we've got some resistance? $10.34. I think a 10 test is possible if we get on a nice little run in the IBB for whatever reason. I think Labu could have a pretty nice move. You know, let's look at LABD, which is the opposite. Look, we pierced the upper Bollinger Band, and it's starting to struggle. Stochastics have crossed to the downside, okay? Not unlike what DWTI looked like. I mean, look at how sloppy DWTI is now. And look at what it's doing. It's making a lower high, right? Had this big parabolic spike out of the upper Bollinger Band, and look, it's had some bounces, but it's pretty sloppy right now. Okay? Making a lower high. Does it come down here and make a lower low? We'll, you know, we're going to find out in the next week or so. Let's see what else we've got. It's a lot to go over here. IWM. Let's look at the IWM small caps. Okay, so on the daily, we had a candle that was completely out of the lower Bollinger Band. We look as though we could potentially be looking at a turn in the stochastics to the upside. So we have pierced the lower Bollinger Band on the weekly. We are oversold. Now, the one thing that I would say is we have broken the long-term trend line in the IWM, and that's still concerning to me. We have a tremendous amount of work to do in order to, you know, fix the damage that has been done. But that doesn't mean that we can't come all the way back up from 94 or 96, where we are, up to 103 in this range, right, where this long-term trend line is, before we hit really significant resistance. So potentially, could we have a nice bounce? It's there, okay? The opportunity for us is there. Whether it happens, you know, we'll see. Like I said, every time I do this, usually the kiss of the death for the market. But SMH, so SMH is kind of one of the so-so. This is an area where I'm just kind of so-so. You know, we had a pierce to the lower Bollinger Band on the daily. We've had a little bounce. Stochastics do appear to be curling up. I'm not as crazy about the way that SMH looks. You know, we haven't broken the long-term trend line of the SMH. I'm curious to see if maybe we want to come down and we want to test that trend line. But SMH, I'm kind of questionable on right now. Let's take a look at the S&P 500. So, you know, look at what we did with the S&P 500. We basically came down. Oops, didn't mean to do that. We came down. And we tested, or we've come real close to testing, the long-term trend line. And we just talked about the fact that, you know, we were looking at over the edge of a cliff when all of a sudden United Arab Emirates supposedly agreed to a production cut. So can we come down here? Could the SPY, you know, S&P come down and test this trend line, find some support and bounce? It's possible. Now, look, I didn't like the action in a lot of the big names, the FANG stocks on Friday. They really weren't all that strong. Right? Google wasn't that strong, but look, it's really close. It looks like it's close to turning, right? Here on stochastics. Let's take a look at the weekly on this real quick. Okay, we're well within the Bollinger Band. There's nothing there. It actually even looks as though this wants to go a little bit lower. Google was not impressive. Facebook was not impressive, although it did manage to close green, it looks like. Netflix has been under pressure. And Tesla had a nice little bounce after earnings. Stochastics crossed to the upside. Does look as though maybe Tesla. So, you know, look, with Tesla, you had a candle completely out of the lower Bollinger Band, right? Could it be a snapback in there somewhere? It's a possibility. SPXL, let's take a look. Look, so if the SPY does continue to bounce, this SPXL could be an interesting area or an interesting one to take for a bounce trade. We did pierce the lower Bollinger Band. Looks like we're getting a little bounce there. It's worth keeping an eye on this SPXL. But then let's take a look at TLT real quick. So the TLT, we got completely out of the upper Bollinger Band. We're starting to pull back. Stochastics have crossed to the downside. Could the TLT continue to drop? I think it's possible. Then let's go to the financials. Because this is one I played on Friday. I didn't play XLF. I played FAS. But if you look at XLF, what did we do? We had a candle completely out of the lower Bollinger Band. We've got a little snapback. Why did that happen? Well, because we got an announcement from JP Morgan. Jamie Dimon bought, you know, $26 million worth of JP Morgan stock. And I mean, listen, for Jamie Dimon, that's a a drop in the bucket. It's not a whole lot. It sounds like a lot of money for him. It's not a lot of money. So that happened. Deutsche Bank announced they were going to buy back some bonds, and this thing was cratering. So that was kind of a big deal for Deutsche Bank. Nice big reversal day on candle. Big, huge volume. Stochastics crossing to the upside on the weekly. So Deutsche Bank had a nice bounce. And we could see a continuation in the financials. I mean, all of the financials, Bank of America, Morgan Stanley, Goldman Sachs, they've all been beaten up severely. And, we could see a continuation of the move in the financials. Now, I'm not suggesting to go out and chase this stuff. Let's see what happens on Tuesday. But it does look as though maybe we could get a nice little bounce in the markets. What I'm hoping is that we don't get a lot of, gap up days. All right? Those are the worst types of days to day trade typically because, at least for me, I'm just not a gap up guy. I'm not a short guy. So, I'm a long bias trader. So gap up days typically work out better for shorts. You get the gap up in the morning, and then shorts, they buy the top after you get that parabolic spike and things, and then stocks fade for the rest of the day. Shorts typically do better on gap up days than I do anyway. So financials are interesting. Wait a minute. I wanted to go over. I don't know if I did, but I'll go back to it. XLU. Let's go over XLU. So last couple of weeks, I think it was 2 weeks ago, I said, look, if you got utilities, you may be it's coming up into an area of resistance. It's an area where people have been, going for safety, and we pierced the upper Bollinger Band. It may be a time to look to lock in some profits on utilities and look at what has happened. We've gotten a pullback in utilities. The safety trade appears to be fading a little bit, right? And that's not to say that for the long term these won't be great places to. It won't be a good place to be. It's just saying that in the very near term, maybe it's a time to get out of the XLUs and look for some more speculative type plays that could get a nice little ramp on any kind of market bounce. Let's take a look at XLV, which is the healthcare sector. So we've got a candle completely out of the lower Bollinger Band. That's the weekly. And, look, it pierced this lower Bollinger Band. It looks as though potentially we could get some positive action in. I mean, what I'm looking at is the fact that we've got so many of these beaten up sectors that could potentially have a nice little snapback rally. And I think it'll maybe last longer than a day. Okay, we had a nice little bounce on Friday. It was off of a questionable reason, but that just tells you how oversold the markets were, and they were basically looking for any reason at all to bounce, right? They were looking for anything. Give me something so that we can bounce. And they got it with that tweet. And then we got the financials, right? We got the JP Morgan and we got the Deutsche Bank. So those are two positive developments. Now we're getting what looks like potentially good numbers out of China, at least for this lunar holiday. Looks like there's some positive stuff there. We got the Fed out of the way, right? Which was a bit confusing. I mean, we don't know if she's going to raise rates or lower them, or if we're going to go to negative interest rates. But the bottom line is we've got some things. We don't have a lot of economic data coming out next week. So it could be, I mean, everyone seemed to be positioned in the theory, in the thinking that, we're coming up into a holiday weekend. We've got China that's going to come out and open, and how is China going to react to all this volatility and news that we've been seeing? We'll find out on Monday. But it seemed to me as though the street was leaning more towards this is going to be a negative thing, and maybe it turns out to be a positive thing, and that is the catalyst that gives us a nice, healthy snapback, nice rally in the market. Don't confuse this with the fact that I still think we've done a tremendous amount of damage, and that we may be, more long term in a bearish type market, but that doesn't mean we can't have some really powerful snapback rallies. And it looks to me like we could potentially have that next week. Like I said, maybe not Tuesday, maybe Wednesday, maybe Thursday. We're coming to the end of earnings season. Look, earnings haven't been great. Everything I read is not good. Not everything. A lot of things that I've read have not looked good. There are a lot of companies that are laying off employees, that are cutting capex expenditures. Not a good trend to see, and that is concerning. So, but we are coming to the end of earnings season, so maybe the volatility, we kind of temper it down a little bit, and and we get a nice little oversold rally, oversold bounce in the markets and in the indexes. I think we could have some nice trading opportunities out there. So that's it for my weekly market wrap. I am going to do my stocks to watch for next week. I will be doing that. And actually, I'm going to do a live ticker TV on Sunday. If you probably 8 o'clock Las Vegas time. If you want to join, if you've got some stocks that you would like me to check out and have another set of eyes on, send them to me in my email or tweet them to me, and I will take a look at them and make sure to include them. Sunday morning, 8 o'clock, Ticker TV, stocks to watch for next week. Have a wonderful weekend. Enjoy the rest of it, and I will see you all, or some of you, on Sunday morning.